Something just changed in crypto regulation that matters more than it looks. The Clarity Act may have stalled in Washington, but behind the headlines, the conversation has shifted in a way that could influence institutional adoption, regulatory certainty, and the future direction of digital assets. Stay with me, because we're going to break down why Ripple completely changed its messaging, what's happening behind closed doors in Congress, and why this could matter far more than the next price movement. For years, crypto industry has asked Washington for clear rules. Instead, it received lawsuits, regulatory uncertainty, and competing interpretations of who should oversee digital assets. Now, something different is happening. After the Clarity Act unexpectedly lost support from 9 Democratic senators, Ripple didn't respond by attacking lawmakers or calling the bill a failure. Instead, the company reframed the entire conversation. Rather than presenting the legislation as a win for crypto, Ripple began describing it as a consumer protection bill, and one that strengthens oversight, supports law enforcement, and creates clear rules for everyone involved. That shift in messaging may sound subtle, but in Washington, changing the narrative can be just as important as changing the legislation itself. And if that strategy succeeds, it could reshape not only the future of crypto regulation in the United States, but also how the world's largest financial institutions approach digital assets. Ladies and gentlemen, if you want the satellite perspective on XRP and crypto, I want to cut through the daily chaos and noise, subscribe to the channel. I break it down simply so you can understand what actually matters in the market. See, every generation faces a technology and technological breakthrough that forces governments to rethink the rules. The internet transformed communication. Mobile banking transformed payments. Artificial intelligence is now transforming productivity. And blockchain technology is challenging one of the oldest industries in history, finance. See, whenever innovation moves faster than regulation, uncertainty follows. Businesses hesitate, investors become cautious, capital waits on the sidelines. That's exactly where the United States has found itself over the past several years. See, despite becoming home to many of the world's largest blockchain companies, America has struggled to establish a comprehensive regulatory digital framework for digital assets. Instead, the industry has largely operated under what many describe as a regulation by enforcement. Companies often learn where the legal boundaries were only after regulators filed lawsuits. See, for entrepreneurs, that creates uncertainty. For institutional investors, uncertainty becomes an investment rate. And when billions of pounds and potential investments And when billions of dollars in potential investments are at stake, risk departments usually choose one option: wait. See, crypto markets are famous for focusing on price. A headline appears, markets surge. Another headline appears, markets fall. But beneath those daily price swings lies something much more important: structure. Financial institutions don't build 20-year strategies around daily market volatility. They build them around legal certainty. Banks, pension funds, insurance companies, and asset managers need to know exactly how digital assets are classified before allocating significant capital. Which regulator has authority? What disclosure requirements exist? How should assets be held? Who carries legal responsibility? Until those questions receive clear answers, many institutions simply continue observing from the sidelines. That's why legislation like the Clarity Act has attracted so much attention from many industry participants. It's not about creating special treatment for crypto. No, it's about creating predictable rules, ladies and gentlemen. See, for a brief moment, it appeared that regulatory clarity might finally be within reach. The Clarity Act gathered support from lawmakers who recognized that the existing system wasn't providing enough clarity or certainty to either regulators or businesses. That legislation aimed to define how digital and different assets could be regulated while establishing clear responsibilities for oversight. Support came from various corners of the industry. Investors watched developments closely. Companies hoped America was finally moving towards a modern digital asset framework. Then momentum suddenly slowed. 9 Democrat senators, including several viewed as relatively supportive of digital asset innovation, declined to support the legislation in its current form. To some observers, it looked like another defeat for crypto, but the reality was considerably more complicated. See, the objections weren't centered on whether blockchain technology should exist. No. Nor were they simply arguments against innovation. No. Instead, the concerns focused on process, consumer protection, ethics provisions, enforcement mechanisms. See, several lawmakers argued that stronger safeguards were needed before the legislation could move forward. That distinction is incredibly important. When politicians disagree over core principles, legislation often stalls for months or even years. When politicians agree on the destination but disagree over the wording, compromise becomes much more achievable. And that's exactly why many policy analysts didn't interpret development as the end of the Clarity Act. They viewed it as the beginning of a negotiation. This is where Ripple surprised everyone, ladies and gentlemen. Many expected the company to criticize lawmakers. Some anticipated another public confrontation between the crypto industry and Washington. Instead, Ripple's leadership took a completely different approach. Chief Executive Officer Brad Garlinghouse and Chief Legal Officer Stuart Alderton began highlighting parts of the legislation that hadn't received nearly enough attention. Consumer protection, anti-money laundering standards, know your customer requirements, bankruptcy protections, law enforcement tools. Rather than describing the Clarity Act as legislation designed to benefit crypto companies, Ripple presented its legislation designed to protect consumers while allowing responsible innovation. At first glance, that might seem like a public relations exercise, but politically, it was much more than that, ladies and gentlemen. See, in politics, language shapes perception. Two people can describe exactly the same proposal using completely different words. One version creates resistance, the other creates support. Ripple appears to understand that reality extremely well. Instead of asking lawmakers to support crypto businesses, its messaging increasingly focuses on protecting consumers, strengthening oversight, and improving accountability. Notice what changed. The company didn't abandon its support for innovation. It expanded the conversation beyond innovation. That's a subtle but powerful shift, because lawmakers who previously worried about appearing too friendly towards crypto now have another way of explaining their position. They can support stronger regulation without appearing to support deregulation. And sometimes that's exactly how legislation moves forward. Throughout history, major financial reforms have rarely succeeded on technical merit alone. They succeeded because public understanding changed. See, following the panic of 1907, the United States experienced one of the most severe banking crises in history. Confidence collapsed, banks struggled, liquidity disappeared. The crisis exposed structural weakness throughout the financial system. Early proposals for creating a central banking authority faced enormous political opposition. Many Americans feared concentrating too much financial power. Supporters gradually changed the conversation. Instead of focusing on expanding financial authority, they emphasized economic stability, public confidence, and protecting ordinary depositors from future crises. This is so important, ladies and gentlemen. Several years later, that evolution in public messaging had created the political conditions that led to the establishment of the Federal Reserve. Whether people agree with every consequence of that decision remains a separate debate, but the lesson is clear. Sometimes legislation advances because the story surrounding it changes, not necessarily because the underlying objective changes. Ripple's current messaging appears to follow a remarkably similar principle. Financial markets, ladies and gentlemen, often reward speed. Institutional finance rewards certainty. That's why today's political headlines matter far beyond tomorrow's price movements. Short-term noise, long-term structure. Every amendment, every negotiation, every committee decision, they're all contributing to something much larger. The legal architecture that could eventually govern one of the fastest growing areas in modern finance. Investors naturally focus on immediate reactions. Institutions focus on the framework they'll still be operating under a decade from now. That's an entirely different perspective. Here's what makes this story even more fascinating. Political negotiations may be appearing to slow. Institutional development hasn't stopped. Ripple has continued investing heavily in infrastructure designed for regulated financial institutions. And one of its most significant moves was acquiring Swiss digital asset custody specialist Mercato. For many retail investors, custody doesn't guarantee exciting headlines, nor does it generate them. But inside institutional finance, custody is absolutely fundamental. See, before a global bank can manage digital assets for clients, it needs secure storage, regulatory compliance, operational resilience, audit capabilities, risk controls. Without institutional-grade custody, large-scale participation becomes almost impossible. In many ways, custody is the bridge between traditional finance and digital assets. And Ripple has positioned itself directly on that bridge. That brings us to another important development. Mercato has worked with major financial institutions, including Citi, which has explored blockchain-based custody services and tokenized asset initiatives through various plot and pilot programs. It's important to separate confirmed developments from market speculation. There is currently no confirmed evidence that Citi is using XRP for cross-border payments through these initiatives, nor is there confirmation that these pilot programs involve XRP transactions. However, that doesn't diminish the significance of what's taking place. The world's largest financial institutions are investing time, resources, and expertise into regulated digital asset infrastructure. They're preparing, not necessarily for tomorrow, but for the financial system they're expected to operate over the next decade. That preparation sends an important signal whether digital assets will play a role in finance. The question is what regulatory framework will ultimately govern them. And that's precisely why the outcome of the Clarity Act matters so much. Because price is reacting, but the system's evolving. If you only followed the headlines, you might think the Clarity Act failed because lawmakers fundamentally rejected crypto. But that's not what appears to be happening. The bill's biggest obstacle isn't necessarily the destination, it's the route Congress takes to get there. Much of the current discussion revolves around what many observers have called an ethics fix. The senators who withheld support argued that stronger safeguards were needed to ensure accountability, consumer protection, and effective enforcement. One of the most closely discussed proposals involves strengthening the role of state attorneys generals alongside the existing federal enforcement powers. Why does that matter? Because it changes the political conversation 100%. Instead of asking lawmakers whether they support crypto, the debate shifts towards whether they support stronger consumer protections. That distinction could prove decisive. Financial regulation in the United States has always been layered. Federal agencies establish national oversight. States frequently play an equally important role throughout their own enforcement powers. Allowing state attorney generals to pursue misconduct gives lawmakers another layer of accountability. Supporters argue that this strengthens consumers' confidence rather than weakening regulation. For senators concerned about investor protections, that additional enforcement authority could address one of the biggest objectives. This is why the negotiations taking place behind closed doors are receiving so much attention. The disagreement appears less about whether regulation should exist and more about how the regulation should be enforced. That's a much narrower gap than many headlines suggest. Whenever major legislation reaches this stage, attention naturally shifts towards the lawmakers who could determine the outcome. Several senators have attracted particular interest because of their previous willingness to engage with digital asset policies. Among those frequently mentioned are Senators Christian Gillibrand, Mark Warner, and John Fetterman. Each has approached digital asset regulation differently. None has presented themselves as an unconditional supporter of the industry. Instead, their public positions have generally reflected a balancing act between encouraging innovation and protecting consumers. That's precisely why they've been watched so close. If revised language addresses their concerns, their position could become an important indicator of broader bipartisan support. Of course, legislative negotiations remain fluid. No vote is guaranteed until it happens. But investors, policy analysts, and industry leaders will be paying close attention to every public statement over the coming days. You're probably asking why this matters. Because Congress rarely schedules major votes unless leaders believe sufficient support already exists. That's why the timing of any floor vote will be closely scrutinized. If negotiations produce language acceptable to both parties, momentum could return surprisingly quickly. Legislation often appears stalled until suddenly it isn't. From the outside, political negotiations can look chaotic. Inside Congress, however, countless discussions happen away from television and cameras. Draft language changes, compromises emerge, concerns are addressed. Sometimes the public only sees the final breakthrough. That's why many observers are watching legislative scheduling almost as closely as the bill itself. The calendar may ultimately reveal more than the headlines. One of the biggest misconceptions surrounding crypto is that regulation and innovation move together. They don't. Innovation usually moves first. Regulation follows. That's exactly what's happened today. Even while lawmakers continue debating legal frameworks, financial institutions are quietly building the infrastructure they need once greater clarity arrives. Digital custody platforms continue evolving. Tokenization projects continue expanding. Banks continue experimenting with blockchain technology. Financial institutions aren't waiting because they're convinced every regulatory question has already been answered. They're preparing because they recognize where the broader direction appears to be heading. The pace may vary, the timeline might change, but preparation continues. Ladies and gentlemen, history offers another lesson. Historical example number 2. During 1860s, the United States faced another financial challenge. Different banks issued their own banknotes. The value of those notes often depended on where they were issued and whether people trust the institution behind them. This is so crazy and so relative. This is my favorite example of everything, ladies and gentlemen. This one example from history, because it is such a harbinger of what can go wrong and what can go right as far as I'm concerned. The fragmented system created confusion, inefficiency, unnecessary risks throughout the economy. The National Banking Acts of 1863 and 1864 established a more consistent banking framework by creating nationally chartered banks and encouraging a more uniform currency system. The transition wasn't immediate. It wasn't perfect, but standardization laid the foundation for a more integrated financial system. Today's digital asset industry faces a different challenge, but one with familiar themes. Markets function more efficiently when participants understand the rules. Clear frameworks don't eliminate innovation. They often allow innovation to scale. History doesn't repeat itself, but it often rhymes, ladies and gentlemen. Think of today's regulatory debate like the construction of the Roman road network. The roads themselves didn't create trade. Merchants already existed. Goods were already moving. What the roads provided was reliable infrastructure. Once that infrastructure existed, commerce expanded dramatically because uncertainty declined. Digital asset regulation may serve a similar purpose. The technology already exists. The companies already exist. The capital already exists. What many institutions are waiting for is the regulatory road system that allows them to move confidently. See, another way to think about this, ladies and gentlemen, is imagine a harbor before the construction of a lighthouse. Ships may still enter. Experienced captains can navigate. Trade continues, but every journey carries greater risk. A clear regulatory framework functions much like that lighthouse. It doesn't create the ships. It doesn't create the ocean. It simply makes navigation safer and more predictable. For institutional investors, managing billions of dollars predictably matters just as much as opportunity. Whenever crypto legislation dominates headlines, ladies and gentlemen, speculation quickly follows. So sometimes we've got to separate facts from speculation. See, some believe regulatory clarity would immediately trigger widespread institutional adoption. Others expect dramatic price movements. Reality is usually more complicated. Clear regulation doesn't guarantee higher prices. Markets respond to many different forces: economic conditions, interest rates, global liquidity, investor sentiment, baby, competition, technology. Regulation is only one piece of a much larger puzzle. What legislation can do is reduce uncertainty, and reducing uncertainty often makes long-term planning easier for business, financial institutions. That's an important distinction. Adoption and price are related, but they're not the same thing. Stepping back from the daily headlines, Ripple's recent messaging reveals something larger than support for one piece of legislation. It reflects a strategic evolution. Years ago, much of the industry's public communication centered on opposing regulators. Today's conversation looks different. Increasingly, leading companies are talking about compliance, consumer safeguards, institutional standards, responsible innovation. That shift isn't accidental. As digital assets move closer to mainstream finance, the conversation naturally changes. Winning trust becomes just as important as winning legal battles. Ripple's decision to emphasize consumer protecting rather than industry advantage reflects a broader transition. It's a message designed not only for lawmakers, but also for banks, institutional investors, businesses, and the wider public. So here's the bigger picture, ladies and gentlemen. Whatever happens with the Clarity Act, one conclusion is becoming increasingly difficult to ignore. Digital assets are no longer operating on the edge of the financial system. They're gradually becoming part of the conversation about its future. The debate has evolved beyond whether blockchain technology matters. Today's discussion is about how the technology should be governed. That represents a significant shift. The industry's biggest challenge may no longer be proving that digital assets have value. It may be proving that they can operate within a framework that earns public confidence. That framework emerges, institutional participation could continue expanding over time. If negotiations stall, uncertainty could persist longer than many hope. Either outcome will shape the next chapter of financial innovation. So, ladies and gentlemen, the coming weeks will be watched closely by lawmakers, financial institutions, technology companies, and investors around the world. Every amendment, every negotiation, every statement from congressional leaders will provide another clue about the direction of American digital asset policy. Whether the Clarity Act ultimately passes in its current form with revisions or after further negotiation remains uncertain. But one thing is becoming increasingly clear. The conversation has changed. This is no longer simply about a debate about crypto. It's becoming a debate about the future architecture of finance itself. And that's why the biggest story may not be today's reaction. It may be the foundations quietly being built beneath tomorrow's financial system. Because in markets, headlines create volatility, but structure creates history. Short-term noise, long-term structure. Prices reacting, systems evolving. You got to pay attention to what's quiet, ladies and gentlemen. You always have to. If you've enjoyed this deep dive and want more analysis that goes beyond the headlines to uncover the forces shaping global finance, digital assets, and the future of the financial system, make sure to subscribe to the channel, and we'll see you in the next one. Happy Monday, everybody. Hope everyone's having a blessed day. A lot to go over. We'll be very, very fast. The time of this recording, the whole narrative of the market's changed. Going back on what we've been saying here, I want to welcome all the new members of the Crypto Public Desk Monthly, all the new members of the membership channel. The first membership video is going out tonight. As we've been saying, once RBOB hits $4.20, everything changes. Right now, the world is easing off. It's in this really pure point of limbo. XRP is going to do it. That's my opinion. It's not financial advice whatsoever. If you don't have confidence in this space, there's no reason for you to be in this space as far as I'm concerned. As crude oil drops, risk goes back on. Right now, the pure hedge is the dollar. I was going over this in yesterday's Zoom call. Either interest rates rise or the yields on the long-term treasuries rise. One of them does the job for inflation. Right now, as the noise continues, and we've got this dialed in about what's happening and why by following our recce and our plan. But as we see oil drop, we know what assets to go into, metals. As oil goes higher, close out of those positions. This is not financial advice. It's just what we're doing, in my own opinion. As the talks of peace progress, risk goes back on. Who knows what the Fed's going to do? Will they do it now or before elections in the midterms or not at all? There's a big difference between the paper markets in the crude oil markets and the physical markets. Action in the front month is pretty staggering for everybody who, dissecting that. But I want to share one thing right here, right now. Nothing has fundamentally changed about this. And if you look at XRP continues to make inroads with everything it's doing. And that's the way you have to be in this market. You got to have the blinders. You got to put them on and understand what you're doing. You got to make sure you don't lose your conviction and don't get cut up like sushi. The ranges in items right now are getting smaller and smaller and smaller. We'll look back at this point and see the best values were here to accumulate. Really were. Everybody has a reason why they got into this market. But as long as we can follow our compass right now, at least what I'm following, RBOB. RBOB hits 420, market's coming down. We called in a video for crude oil to hit a certain point, hit that point, coming down. We're watching the big daddy dollar, DXY. Look where that is. We're watching the yen. Following all of those allows us to pick up crypto at rock bottom prices and see where the world is going, ladies and gentlemen. That's most important. But ladies and gentlemen, if you want to learn how to trade and you want to learn how to invest and you want to take advantage of the chaos right now, come and join the Crypto Public Desk Monthly. Our members during the first act of this conflict saw gains upwards between 50 to 175% on their money, depending on what positions they decided to take that made sense of their personal situation. But if you want to come and join over 620 active traders, investors, doesn't matter where you are in your financial journey. It just matters that you want to learn. Come and join the Crypto Public Desk Monthly, ladies and gentlemen. And I keep telling you this. The era of financial investing has changed. Why I say the era? Because the banks don't get the information they used to get from policies. That changes everything, ladies and gentlemen. But XRP, baby, all the way. You got to understand this right now. You get that Gucci conviction. You get that Gucci clarity. If you're that dismayed about what's happening, I want you to take out a pad, start journaling. I want you to write down why you despise XRP, why you love XRP, what you want to do with your XRP. This will help you understand what you're doing and why, instead of looking at daily prices up and down. And I'm not an AI person. I just edit videos. I'm not very good at that. We do the best we can. I'm a financial mercenary. I'm sorry. I don't do half these things. But if you're here listening to this video, you're in the right place, because don't you love knowing what's going to happen before it does? If you found this channel, right? If the almighty algorithm has brought you here and you've subscribed and you made it to this part of the channel and you've listened to the candy from Italian Ice, don't you love knowing what's going to happen before it happens? Don't you? I love being a financial mercenary, everybody. I do. I was born for this. I'm designed for this. Not everybody is, right? But when you understand what's happening and why, it allows you to win daily financial combat a lot better. A lot better. Don't lose that Gucci conviction. Don't lose that Gucci clarity. XRP is going to do it, baby. It's going to go all the way. That's my own opinion, not financial advice. So you can either believe in yourself and why you got involved or not. I love how everybody throws shade on the other channels of people talking about what they're doing and why. What's the point of doing that? We're all in the XRP army. What's the point? If someone's telling you ways on how they're going to do well, you should thank them if they're giving you this away for free. I can't believe I give half the things I say away from free here. I do, but I do, whatever. You make a living by what you make, a life by what you give to others. You got to give back. That's what I learned on the phone New Mercantile Exchange. So if you don't have a ticket, you don't have a chance to win. Ladies and gentlemen, watch crude oil. Watch RBOB. As those hit certain levels, it's got to come down. As those start coming down, the narrative about interest rates change. As the narrative about interest rates change, metals go up. I told you that we like Bitcoin. We're long now. We like the metals. We're long. I told you last video what we're doing. I tell you what we're doing and why. You want your hand held. You want to learn how to take advantage of this chaos that's coming right here and see the returns that our members saw during the first situation when this went bit turbo. Come and join the Crypto Public Desk monthly. Join over 620 active traders, investors who are taking their destiny to their own hands. One solid call pays for an entire year. I love you all. I'm going to see you on the front lines. Nothing I said is financial advice whatsoever. This video is for educational purposes only. Always consult your licensed advisor before making any investment decisions. Never invest any money from watching a YouTube video. Don't ever do that. Again, never invest any money from watching a YouTube video, ladies and gentlemen. I love you all. I'll see you on the front lines. Have a blessed day.